2022 kicked off as a strong year for crypto and blockchain startups. VCs poured in a record high of $9 billion in the first quarter, according to PitchBook numbers. Then came the crash.
What a day for crypto right now, and specifically Terra. A lot of people concerned about what this means for stablecoins in general.
Crypto hedge fund Three Arrows Capital is in hot water.
Crypto scams everywhere are getting bigger.
The crypto winter may have frozen some investors to the bone.
And here we are now. The world's largest crypto exchange has just said it plans to buy its biggest rival, FTX. We told you the deal might not work out. Now it hasn't.
It's almost impossible today to build another Binance, build another FTX. Almost impossible.
Prices plummeted. Funding shrank. Valuations fell. Employees laid off. Now investors are no stranger to the roller coaster ride that is crypto. But the downturn was sharper this time. Why? Well, crypto has gone mainstream faster than we imagined and is now affected by macro factors such as interest rates, inflation, and politics. To add to the uncertainty, regulators are still playing catch-up. But there are those who see different signals, growing interest in the potential of blockchain, founders committed to their decentralized visions, dedicated crypto funds investing in the next big startup. So what are the top VCs in crypto, blockchain, and Web3 around the world seeing for 2023?
This story is not finished.
This is Crypto Rising, where smart conversations happen.
It is a story that has shocked millions, shaken the industry to its core. The man, Sam Bankman-Fried, who was once celebrated as a visionary in the crypto world, along with his empire FTX, came tumbling down in less than a week, and the story remains untold. It is still unfolding. Right now, this is what we know. $10 billion worth of customer assets. We don't know who has access to it, certainly not the customers. Now, booms and busts are common in crypto, but never in the history of crypto anything has come close to this scale. And it was having true reverberations across the board. Hello and welcome to Crypto Rising, the monthly series where we deep dive into the news shaping the world of crypto. And one could argue there is no bigger story than what we are talking about right now. I'm Angie Lau, editor-in-chief at Forkast.News. Today, we try to get our heads around the impact of FTX collapse on all parties, the VCs, the institutions, regulators, retail investors, Web3 companies. Everything really feels like it is at stake. The overarching questions are we heading towards a greater contagion? How big will this get? Will around 1 million FTX customers who put their faith and money into the exchange reel from losses? Will a call for regulations be heeded? Will VCs put their money and trust back in the crypto ecosystem? All that remains to be seen. Now, this is a live stream, and it's for you, our Forkast audience and global community. Almost 500 of you are joining us right now from across 80 countries, and many more joining live on social media platforms. So we want to hear from you. This is an opportunity to directly ask the newsmakers joining us over the next hour any questions you may have. You'll see a Submit a Question tab on the right-hand side of your screens. Enter your name, your email address, question, and hit Submit. Now, Forkast has curated a spectacular lineup of VCs for you. Super excited to welcome them to you right now. Jahan Chu is the co-founder and managing partner of Kinetic, a Hong Kong-based blockchain investment and trading firm. He's also the founder of the Bitcoin Association of Hong Kong. He is a crypto trailblazer, Jahan, with almost 10 years of experience investing in blockchain and community building. And you've seen this before, Jahan. We also have Jin Chao. He's the founder of No Limit Holdings, which recently launched its first investment fund, CVP No Limit Fund 1. It's a board, and he is a board member of Binance.US. He joined Binance.com in 2018 as strategy officer, where he led the Binance Labs venture investment team, Binance Launchpad initial exchange offering, and Binance X Fellowship Fund teams before stepping down in March 2022 to launch his own fund. And finally, a few days back, we spoke to Kevin O'Leary, chairman of O'Leary Ventures and the famous Shark Tank host, who's also an investor in FTX International and FTX US and an account holder with FTX. And he is one of many customers whose capital is locked in the exchange. Here's what he had to say. You know him as Mr. Wonderful, one of the most charismatic sharks of Shark Tank. Welcome, Kevin O'Leary. There are no clear regulations that have been established yet, despite the growing calls for regulation, including yourself. We're seeing 20-plus draft legislation. We just had the midterm elections in the U.S. People are still trying to count the ballots and see who the winners are. Where are we on regulations? You can say that you can't be trusted. You can't assume that we can trust anyone, which essentially is a giant brush, black mark against the entire industry. And yet, where are those regulations?
Crypto is not going away. It's not going away. It'll take this hit. It'll move on because the promise, the productivity, the attributes of it are so powerful and so disruptive that they deserve a place on the international financial services stage. It's just a matter of when are we going to get that regulation. So I will stay invested. I have many other positions. This is not the first time I've had to take down, as an investor, you have great days, you have bad days. That's just the way it works. But you learn over time to be diversified. I don't have all my eggs in one basket, obviously. If all of this volatility has any silver lining, it's going to be the tremendous pressure on the Hill to push forward legislations and protect investors, which is what they've always done. The system works when it's regulated. And for any of you out there, the early Kryptonians, as I call you, that don't think we need regulations, I'm turning your channel off. I've had enough. I've had enough about let's keep it decentralized, no regulator. I'm just tired of it. I'm tired of that rhetoric because it's not helpful at all. It's not helping anything move forward. All it's doing is diminishing value. It's crushing the valuations. Look at what happened to Bitcoin the minute this volatility brought into the market. Lost another 20%. We're never going to get Bitcoin back on a positive track until it's regulated. Same with stablecoins, same with everything. And so now's the time to use this opportunity. When you get volatility, we have the proverbial blood in the streets right now.
Is there an opportunity right now for investors? A lot of people taking a look, they were feeling pretty good about prices of Bitcoin, seeing a period of instability. And then all of a sudden, it really seems that the industry leaders shot the industry. It feels like a headshot, but it was certainly not the foot, as a serious body blow. There is now a feeling that the industry itself, the entire industry, crypto, faith, trust in blockchain itself, under duress, and people are leaving. And they're taking their dollars and their trust with them. What's your take on that?
Yeah, I mean, that is what you could say in an hour like this. But the truth is the opportunity of what blockchain provides in authentication or what it provides in transfer of funds or payment systems is so disruptive that it'll be back on track as soon as we get legislation. I'm not worried about that. And in fact, you're bringing up an interesting theme here that we should transition into or segue to, if you will. I have never seen more opportunities than I have seen in the last 2 days to invest. My team and our fund are being inundated with new projects that obviously have hit a brick wall in terms of getting funding. I'm tiptoeing through the tulips at extraordinary valuations. I don't care what they were thinking they were going to raise at last week. It's a whole new ball game today. And so I think some of the greatest investments I'm going to make in this space are going to happen in the next 60 days. Nothing brings forward opportunity than chaos. And we have massive chaos right now. This is the time to hold your nose, even though you feel queasy about crypto for obvious reasons, and invest, because you're going to get it at valuations that have never been seen before. The air has been popped out of every single crypto deal tire. And now it's just a matter of picking the best projects, which is exactly what we're doing right now. I'm doing that with the Cipher Fund. I mean, I'm very opportunistic, and I'm very happy that we brought this fund at this time. It's very difficult to raise capital, but the counter argument is, look, the opportunities are extraordinary, absolutely extraordinary now.
You bring up a great point. Cipher Fund, UAE, you have Middle East money in there. This is a new fund for you. You're getting into some serious action right now. And we're hearing as well from other smart VCs like yourself that are holding their nose. Some are probably doing something else. But the ones who are holding their nose are seeing a buying opportunity and doubling down, because whatever you're doubling down on, the purchasing power of your dollar right now is probably 10x. Would you say?
It is. It could be even more. I'm going to have a conversation this afternoon with a deal. What's happened is all the deals that were close to closing in the last 60 days slowly ground to a halt, like molasses, because the market could sense this coming. And obviously, Bitcoin's an index of pricing all crypto. And once it started to take a run down, past 10, 12, 15, 20%, all the deals just collapsed. So now the ones that we liked, that we had done due diligence on, and we've only closed one position in Cipher, missed it, which, I love. Evan Chung is fantastic, and that's our first deal. So I look at the quality of the opportunities. If there's more Evans out there, and there are, whatever we were going to pay, we're going to pay 10 times less, maybe 20. Let's see what happens.
Well, it is big discount because big damage has been done. An incredible fire sale happening right now, guys. Jin, Jahan, get in here with your feedback. What are you experiencing? Do you agree? Jin, I'll start with you. What has the past week been like for you, for your fund? Are you getting those calls the way that Kevin has from teams that want to fundraise?
Yeah, well, I'll largely agree with most of the points that he just made. From our standpoint, we are in the similar position where we see this as a fantastic investment opportunity. The past week has been tumultuous. I agree that the deals are going to be delayed. Valuations will come down. And so this is the right time to be deploying capital, as it has been, frankly, for the past quarter, if not a little bit longer than that. But in any case, I do see this as a fantastic time to be deploying capital, not just in the next 60 days, as you said, but probably even into the next 12 months. For the fund, the first thing that we had to react to were obviously LP inquiries. So we wanted to get a letter out to LPs immediately and understand, more importantly, the positions that our portfolio companies are in and what exposure they had to FTX. And so we assessed that fairly quickly, and luckily it was immaterial, the amount of funds that all the portfolio companies had potentially locked up in FTX. So that was fortunate.
How about you, Jahan? Do you have exposure to FTX? Did you get those same calls from LPs? And how do you view the market right now?
Yeah, thanks for having us. Yeah, we had a little bit of exposure to FTX just on a personal basis, but I guess we're fortunate, despite the fact that we were seed investors in FTT token way back in 2019. I remember Sam pitching us at one of the, I think it was Token 2049 conference in Hong Kong, all the way to now. Even though we were seed investors, we were largely out of our position over the past year. So fortunately, we kind of avoided a lot of the carnage. But most firms, if you have some type of trading activity, did have direct exposure with funds on FTX. In addition, some of our portfolio companies may have had exposure in terms of funds that are locked up or loans that were outstanding to one or more of those firms. So we were indirectly impacted primarily. The direct impact was largely minimal. But I think, looking at the bright side of it, valuations definitely are down. So there's a lot more opportunities. So definitely agree with that. I think the other side is just the sheer attention factor. Because so many firms are being wiped out, a lot of the fringe are being wiped out. it's actually making it easier to concentrate and focus on the few firms that are left in this space that are creating value, and focus our investing efforts on a smaller number of higher quality founders. I think the other thing to note here is that everything that's happened in the past, whatever, 6 months, Luna, 3AC, FTX, that's all the financial side of crypto. And it says nothing or barely anything about the technology side, about the innovation side. Everything that has happened is really limited, and it's hard to see this because it's all mixed up. It's limited to just the financial trading side, moving, dollar from, hand A to hand B. And what's happening in the background is there's still incredible technological development in areas like ZK Sync, or in areas like ZK technology, different types of protocols, different types of innovations in digital assets, in terms of content. And so all of that is continuing. A lot of these areas, yeah, it's going to take them longer to raise, but they're still creating really incredible technology, and that can't be ignored.
I think that the other part of it is really the way that it really has eroded faith and trust, first at a retail level, but also puts into question the actual due diligence, and really gave the industry a black eye when it comes to the venture capital class itself. Are you feeling the reverberations when Temasek and the Sequoias were supposed to do the kind of due diligence that we now in hindsight are questioning? Why didn't this team have a CFO? The age of this team, very insular leadership group. There seemed to be no firewall between Alameda and FTX. All of these questions are now coming out. And so what does it say about also the validity of the venture capitalists to be able to actually deploy that cash now? Are you finding the pushback from your LPs, number one, who might agree that there are really incredible projects to invest in, but perhaps they just want to sit on the sideline right now because the whole thing is in question? Do you feel that there is that impact right now in the industry?
Yeah, I mean, these are bull market investments, right? These type of valuations where a lot of these are done, and I think they were doing bull market diligence, which is little to none. And it's not, to be fair, it's not limited to, I would say it's not limited to the crypto sphere. A lot of the largest firms, I think, do very little diligence, when you have kind of this pace, right? Tiger, SoftBank, like they were doing, multiple deal. I think they were doing like one deal a day at some point. And it's impossible to do like deep diligence at that pace. For us, I think we're lucky that we're actually not a fund. We don't have LPs. We deploy our own capital. So we're largely immune from those types of calls. But of course, I think it is what happens is it starts to push LPs who are in these firms, and especially institutional LPs, to exercise the type of governance that they should have on the firms and how they're doing the diligence. And I think this just makes it all the more urgent and all the more acute for the diligence to be done in the next cycle.
Is there a corporate governance issue here? And how are you going to apply that thinking? What are the lessons that we all need to learn as really an investor class, investor pool, an industry, participants, tourists, everyone who's potentially trying to figure this all out? What are the lessons to be learned here?
I can try and take that one, Angie. I think there's a lot of homework that needs to be done on all sides. So I don't think you can just point a finger to one party. At the end of the day, I think the root cause, this was a corporate governance issues. I mean, all indications are that they violated, FTX violated their own terms and conditions. And so this will almost come down to just simple legal enforcement at the end of the day. Because if you were to do due diligence, Sam was an incredibly successful trader. But if you look at the DNA, he was one of the largest, Alameda was one of the largest customers of Binance. And therefore, the natural thought was, let's vertically integrate and create our own exchange. But do you want a trader operating in exchange? He was trained to optimize capital. And so if you look at some of the steps he took, that's what his kind of background would lead him to do. The big misstep he made was misappropriation of user funds. Whereas if you look at the DNA, for example, Binance, the team comes from a background of providing liquidity services to large bulge bracket trading companies in the past, and building order books, which is what you'd probably want out of an exchange team. So I do think that there are those things to look at, but also as an investor, there's a lot of responsibility that falls on your shoulders as well. And just to comment earlier on the LP inquiries, I also think that as an investor, you should do homework on your LPs. So we've solicited primarily LPs that are believers in this technology, understand the risks, and they're allocating what they can afford to lose. And so there's proper due diligence on both sides to make sure that all the parties understand what they're getting into, what the risks are. And but in this specific case, there seem to be some pretty egregious breaches of just terms and conditions and contracts.
Yeah, I mean, this is absolutely a black eye. Jahan, what you're going to jump in?
Yeah, I mean, we talk about the mainstreaming of crypto, right, and blockchain technology, and I think that this is the other aspect of it, right? It's not just about users handling crypto; it's also about the corporate governance side, the types of standards and expectations that large cap companies have in terms of governance and their investors. That's also part of the mainstream process, and I think that FTX, obviously for worse, kind of got ahead of itself, right? When they raised initially an equity round at $1 billion valuation, that's the point where they should have done what Mark Zuckerberg did at a similar point, where he hired very experienced kind of gray hair executives to help power the company and surrounded himself with that. And I think that if you look at the difference between these types of companies and the trajectories who have had similar, kind of stratospheric accelerated rises and growth, that is one of the main differences. I think having an experienced team who operates not only as like a check and balance, but also as like a guiding, kind of voice, and someone who can really, stand up to the founder and the founder's inexperience. And if you look at the composition of the team, I mean, obviously it's so clear in hindsight, they just didn't have the experience to run a company this big.
Yeah, the audience wants to jump in here. This is a question from our audience here. Do the panelists agree that far more regulatory action is needed for centralized finance, rather decentralized finance, in light of recent events? The regulatory question is now popping up. A lot of people in the days that followed said, where were the regulators? And now, quite obviously, a role to be played here. Your thoughts on the role of regulators?
Well, I agree that there needs to be more regulation. The question is, where does it come from? The industry has already, over the past week, called for more transparency. You've seen a lot of centralized exchanges publishing their wallet addresses and trying to show proof of reserves. So that's a step in the right direction. If you wait for the traditional regulators, it's just not going to be fast enough. So there does need to be more regulation. There needs to be more self-regulation. There needs to be more perhaps industry within the industry, third-party oversight. But if you wait for sort of regulatory bodies in the form of governments, that's just not going to be fast enough.
Yeah,
I would agree with that. I think that the original sin of kind of regulation in the crypto age is they're just slow. It's not that they even necessarily mean poorly or mean maliciously. They just are unable to actually keep up with crypto's speed. And I think that it's great. I'm super encouraged by what we're seeing in Hong Kong with the kind of recent openness to regulate retail crypto, and sounds like Singapore is also in recent headlines. Seems like they're doing more as well. So that's great. But they just need to be able to move faster. There's really no other way to it. I think that what we're going to end up with is a kind of a bifurcated regulatory environment for centralized and decentralized, where I think maybe 75% of DeFi will end up regulated, and their other 25% will kind of operate in the kind of fringes of anonymity and full decentralization. But I think the vast majority of volumes are going to filter over to regulated centralized exchanges and then regulated DeFi. So regulation, it actually, regardless of what I think should or shouldn't be, it's coming. It will dominate, I think, the next cycle for trade. It just needs to happen faster so that we can avoid things like this and root out bad actors earlier.
Yeah, I want to share a poll with everyone. We asked our audience what their prediction for crypto in 2023 would be, and more than 41%, in fact, said this. Let's take a look at the poll. Yeah, you said it. I mean, even before we ran this poll for the past couple of weeks before the FTX meltdown, 41% said greater regulatory clarity is needed. I wonder if you guys saw the Gary Gensler interview on CNBC just this past couple of days. Said investors need better protections in crypto. But here's the thing, there are no clear rules in the US. It's very fragmented. Regulators, agencies aren't necessarily seeing a holistic picture. There's about 20 plus, as I said, draft legislations. We've had the industry crying out for the need for oversight. Lots and lots of people flooding, including Kevin O'Leary. The pressure is now on. One thing that I thought he said was really interesting, and we'll share the full interview immediately after our conversation as well for everybody on Forkast.News. One thing he said was, I asked him, is jurisdiction shopping over? He said, absolutely. It's got to be the US. Do you guys agree? You're in Asia. Do you agree with that sentiment?
Yeah, I do not. And a couple of points on governance in general. I think it's less about regulations and rules and more about transparency. And so I'll make a counterpoint that yes, there will be more flows and perhaps trust to regulated centralized exchanges, but I also think there'll be flows to decentralized exchanges. And I do think governance should come from stakeholders. So if a governmental regulatory body wants to be serious, be a stakeholder, be a node validator, participate in this technology and network. Otherwise, I think it should be largely coming from the voice of users, industry players, infrastructure providers, to provide that guidance, and the enforcement can come from other parts of the ecosystem. Yeah.
Well, Jahan, very quickly before we go to break, what do you think? China has a very different set of rules. You're in Hong Kong. Established rules are being set right now. Do you think that the US is going to have to take the reins, or do you think that regulators around the world still need to step up? Your thoughts?
I think that it's still kind of up for grabs. I think there's we're still going to be playing regulatory hopscotch, regulatory, kind of arbitrage for a few more years, because I think that the volume of trade can move so quickly from one venue to another. It's relatively easy to kind of pick up your entity, establish stuff in another entity, move your kind of servers, it's all in the cloud anyway, over to a friendlier jurisdiction. And it's very clear that the Middle East, and especially the UAE, is being extremely aggressive and extremely welcoming, which is why so many exchanges have moved there. I don't think that's over. I'm not sure how many more quality jurisdictions are left that are willing to take this type and this size of risk, especially given the kind of egg on the face that everybody has after FTX. But I do think that while the US obviously will have a heavy influence, especially in terms of enforcement, I don't think that's the end of the story, and I don't think it all flows to the US by default going forward.
Well, hang on to that thought right there, everybody. We're going to take a short breather here. Remember, your questions will be answered right here when we return on Crypto Rising. We're going to talk about crypto investments, how top VCs are investing out of crypto winter, or perhaps it is going to be the ice age, but who's going to thaw it, and where are those shopping deals? See you in a minute and a half right here. Stay with us.
Forkast.News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. We go to where the action is, from Asia to the world. Forkast is the most reliable source of intellectual discourse and insight that informs, educates, and bridges the gap between the blockchain industry and the mainstream. The future is being built, and Forkast has it covered. This is Forkast.News.
If you don't understand the future, you'll never see your place in it. Introducing Forkast Plus, covering all things blockchain, independent reporting, insights, and access from Asia to the world. We cut through the noise where technology, insights, and access meet, where smart conversations happen. Make friends with disruption. Forkast Plus.
Welcome back to Crypto Rising. Hundreds are joining in right now, and even more on social media, live right now from 80 countries around the world. The top question is this: what happened after the FTX fallout? We're still feeling the reverberations, and who knows where the contagion ends. And can you believe it was not even a week ago when all of this revealed itself? Now, we asked our viewers what their thoughts were on investing in digital assets and blockchain startups before the FTX collapse in a poll. And it's going to be interesting to see what that sentiment was like, because right now one could say very clearly that this is a crisis of sentiment. But let's take a look at the poll right now. And the results said this: hey, 38% before the FTX collapse said it's a great time to invest. I would say that that sentiment has likely changed in the wake of recent events. Jin and Jahan, what was your reaction? Jahan, I want to ask you, the moment that those headlines came out, that tweet heard around the world, your immediate reaction, share it with us.
It's just that sinking feeling, right? Back on the merry-go-round again, this again. I think I was fortunate at the point at that time that I didn't really understand the severity and the depth of how bad it was. So that only kind of came later. But it's just that initial shock. And to be honest, it was two things I was feeling. One was just sad. I really felt sad for our industry because FTX had taken such a leadership position, and all of us, including myself, had really felt that this was a relatively positive influence. Just overall, they had been able to garner a lot of attention. They, had been working with regulators. Even though I didn't agree with, a lot of their stance on DeFi, it was good that they were engaging. And then for them to just be so just negligent and potentially even malicious actors, it's sad. It's really, really sad because, we're always vulnerable to just the humanity of enterprise.
It's kind of like crypto is kind of like what growing up as a minority, as an immigrant kid, always told by my parents, you just have to be that much better. You have to just be that much more above reproach. You just have to be that much more to be considered even on the same level or close to it. That's what this feels like. Jin, what was your reaction when the news broke?
Yeah, I think having gone through the internet in the early days, the financial crisis, what's transpired earlier this year, or even what happened in 2017, I wouldn't say that I was numb to it, but again, still quite surprised at the speed of which things happened and the severity. But what I was reminding myself is, again, as Johan mentioned earlier, this is the financial side of it. This is a large liquidity platform that if and when it goes away, there are plenty of other places for the liquidity to go to. So I do liken this, and we talked about this before the show, that this is analogous with a Lehman Brothers type of collapse. And there are other banks out there. And when banks collapse, you don't lose faith in the US dollar or the underlying assets. So I would just also remind everybody that what happened with FTX is, by the way, a daily and perhaps even an industry standard occurrence in traditional finance. It's just that in this particular case, the terms and conditions were quite clear and unfortunately broken. So I shared in the surprise of how quickly things unfolded, but in retrospect, we also saw this type of speed earlier this year. And so going forward, I don't know if it would surprise me again. I do think the first thing to think about is, where does the contagion go? I thought about what this means to the depth and length of the current crypto winter. I'm not sure that it necessarily impacts the length, but certainly the depth. We saw new all-time lows last Thursday. And as you said, Angie, there will be other news coming out. But the good thing is that news should come out in the course of days and weeks, and probably by the end of this calendar year, rather than dragging on for months and quarters. So I think the market will have time to absorb things and correct itself within the time frame that we've seen in prior cycles.
Do you think the industry needs to save itself? And is there leadership right now amongst the CZs of the world, the Vitaliks, and so many other market participants? Can the industry come together to save itself? And it really feels like there is no backstop at the moment. There is no big rescue package called the Federal Reserve, or a $750 billion bailout of the financial system. And so who's the backstop here? Do you think the industry, is it time? And what are your thoughts there?
No, I don't think there needs to be some type of, kind of industry backstop per se. I mean, I think that, there needs to be a culling. This is, kind of Darwinian venture, right? This is what happens. There's always cycles like this in extremely nascent areas. And remember, we're only kind of 10 years in here for the entire industry. So this is to be expected. It's extremely painful. But, when you're creating a planet, there's a lot of eruptions. This is what happens, and it's sad and it's terrible. But I think on the other hand, what is it, CZ? I mean, probably Jin can talk more about this, but CZ has kind of suggested some type of industry, kind of support fund. That sounds pretty interesting. That would be an example of not an industry-wide, kind of consortia, but I think it's, this is the natural way of things. I wouldn't be too reflexive about calling for, massive, kind of industry bailouts or anything like this. This is the market's doing what the markets do.
Jen?
Yeah. No, I agree 100%. I think this is an opportunity for industry players who act best in the interest of their businesses and in the interest of users and the interest of all stakeholders. They're the ones that will succeed, and that's the way it should be.
What happens now? What is the shopping opportunity? Johanna, I'll start with you. You're of the opinion that the key to DeFi's mass adoption lies in a hybrid model. You have large institutions like NASDAQ, Goldman, even governments. That's where the users are, and that's where the near-term adoption of blockchain will come from. What does that hybrid look like, especially on the heels of this?
Well, I mean, we're even before this happened, we were seeing it, right? KKR putting shares of one of its funds into a security token platform. JPM doing some type of their first kind of DeFi trade. You're already seeing it happen. Those are just the kind of the initial forays into it. There will be more of that. I think that the next, I'm not sure if it's going to be the immediate next cycle. I think if there's a lot more liquidity which flows into the overall macro markets in the next 6 to 12 months. I don't think actually that regulation, again, will be ready to set the stage for a fully regulated, kind of trading environment, regardless of whether it's CeFi or DeFi. So we might have an interim, wild run again. But after that, I think we're on the path to fully regulated, large scale exchanges, and that being where the volume goes. Because I think the biggest thing is that I think a lot of the industry players, including the major trading desks, I think that they've been burned way too much, that they probably will prefer to be on a more regulated exchange venue and doing trades where there's some more standards of transparency and liquidity and oversight and governance, because they've just lost too much money. All the trading desks lost money this cycle, and I think they'd prefer to be on something which they can rely on.
Another question from the audience. Jin, I'll let you take a stab at this first. Jahan to follow. Question from the audience is that crypto has a promise to bank the unbanked and democratize access to finance. Did the recent events prove that crypto is no different from the existing financial and banking system?
No, not at all. I think if you look at the underlying technology and the projects that are building applications to serve those users, that is still going on and will continue to go on. If anything, the events that happened with FTX really included all parties that don't include the banked and unbanked. So hopefully what's at the heart of this technology will continue. And these are a lot of projects that we as a fund are investing in.
Jahan?
Yeah, we're definitely still at the early stages, or we seem to perpetually be at the early stages of finally banking the unbanked. But I think it goes beyond currency. I do think that cryptocurrency still has an incredible amount to offer in terms of benefits, accessibility, inclusion to most of the world in terms of just being able to have access to finance and access to capital. But again, it's not only about currency, is it? A lot of the digital asset space has nothing to do with currency. It has to do with utility. It has to do with access to tools and access to information and access to even things like, monkey JPEGs. That type of ability to access even markets for creators, that's also what we mean by, kind of crypto inclusion and this next wave and the promise of Web3. So that doesn't go away. We still work on that. And yes, there still needs to be a lot of work to be done to make onboarding these types of unbanked users easier, more safe, and more distributed. But it's not just about the kind of currency.
I want to share another poll we asked our viewers, where we asked a very simple question: where would you invest? And so let's take a look at what people said. 39% said they would invest in Web3 and blockchain. We gave them options of cryptocurrency, GameFi, NFT, metaverse, but it was really Web3 and blockchain, the underlying technology. So that is actually heartening to really see. But let's take a pulse of what's happening here. The crypto VC market, one could say, mirrors the global trend of scaling back investments. And there have been a drop in the number of deals. Only $3 billion were invested in startups in this space in the last quarter. Compare that to a record high of nearly $9 billion invested in Q4 of last year. That is a significant drawback. And now, in light of FTX meltdown, one could say that a lot of investments in the bear market are at risk. Now a lot have gone into infrastructure building. A lot of VCs made some big bets on crypto this year. Some of the projects, such as Miston Labs, aren't even profitable yet. It's not even the main net, but of course, there were fights for allocation. It felt like a bullish fight for allocation. They managed to raise $300 million in a Series B. Kevin O'Leary says he won allocation. I think the folks here, you guys in Miston Labs, curious Jin, are you in Miston Labs?
Yes, we are.
You have allocation. Jahan, you in Miston Labs?
We're in Aptos.
You're in Aptos. Okay. Okay. You're going to duke it out. The ex-Meta teams are duking it out with the VCs right here. But do you see VCs' risk appetite changing in the wake of really not only just what's happened in the industry, but let's take a look at the macroeconomic environment as well. Inflation, pressure, rising rates to try to counteract the inflationary pressure on every household. Where will you allocate your funds going forward? Jahan, I'll start with you.
To be honest, we're not really changing tack in terms of how we think about the space. For us, we've always been hyperlateral in how we invest. I mean, we invest across all sectors, all geographies, mostly early stage. Whether it's scaling or privacy, infrastructure, NFTs, metaverse, we really look at everything. And again, although we do invest a lot in DeFi, a lot of our investments have nothing to do with the pure financial side of crypto. So we don't, shy away from that. We just stay the course. I mean, this is a very severe, unfortunate, ugly, kind of blight on the industry, but this too shall pass. And tomorrow's another day, and there's still founders graduating from MIT and Stanford and HKUST and great places where they need funding, and they're building the rails of tomorrow, and they're building the next kind of TikTok. So we don't actually change a whole lot. We may slow down a little bit, change the pace up. We may fight for lower valuations in light of the market. But that's it, really. Not a whole lot changes when you have seen as many cycles as both Jin and I have. And when you have the experience of kind of investing through them. We made, just like kind of Kevin said, we made most of our money actually investing in 2019. And many of our infrastructure companies, like we were seed investors in Blockdaemon and Series A and Alchemy, and all of these ballooned in the last, these were crypto winter investments. Now absolutely is the time, and you just have to have the capital and the foolishness or fortitude, either one, to keep going.
Conviction, let's call it conviction. Has it changed your conviction, Jin? What has it changed your investment strategy? What projects are you investing in, looking at, shopping for?
Yeah, no, not at all. I'll echo Jihan's sentiments, and also, when I was leading Binance Labs in its early days, to mirror his comment, that's exactly right. Our best performing projects happened from mid 2018 to mid 2019. The depth of the crypto winter that we're in right now, and in fact, this fund was designed specifically for this cycle, and we're hitting the timing at the right time. So again, similar, I think, to Jahan, we are looking at pre-seed, seed rounds, or early stage projects, and to the extent that there continue to be very good founding teams with very good ideas and very good ability to execute, we're going to support that with capital. Those are the right ingredients to value creation. And to Jihan's point, again, when you look at the talent coming into the space and the desire of the top talent across other industries to come into the space, that's still there. I will kind of review that, I think, over the next couple of quarters to see if there are people that are now more hesitant to come into this space. But then you could also make the argument that is now another, again, separation of missionaries versus mercenaries when you come to the labor market coming in, as opposed to the capital coming in. Again, in all the inputs, you're now getting a clear separation between the missionaries and mercenaries, and the missionaries are ones that are building value.
Yeah, and we report on it and continue to report on it every day. I want to talk about the Asia perspective here. And for those in Hong Kong, I don't think it's lost on anyone that when Hong Kong really tightened the regulatory rules on crypto and exchanges, FTX were among the many to leave Hong Kong. Being where you're from, with ears to the ground there, is there a sigh of relief that that did not happen under their watch? Jahan, what do you think? Especially since the regulatory perspective from Hong Kong is changing. There was a real sense that this was a lost opportunity, FTX leaving. It did not feel good. Do you think that perhaps there's a little bit of relief side today?
I'm sure there is, but to be fair, I mean, I think it's going to be a long, excruciating, pretty disgusting process to, kind of dig through the forensics of what happened. And unfortunately, I think a lot of it started probably here in Hong Kong while FTX was here. And so I think, while the timing is kind of in some ways fortunate for the Hong Kong government, some of it will kind of, I think, echo back, when Sam is testifying before whichever congressional or whichever, kind of judge. So there's maybe a bit of relief that they're avoiding some of the brunt of the bad press. But to be fair, I think for the most part, this is still very much seen as a bad actors, and less about a regulatory failure, because again, they are in Dubai, in Bahamas, where ostensibly they're regulated to some degree. And I think that there's just kind of very little getting around the fact that if an intelligent, capitalized bad actor wants to deceive and kind of manipulate things that they can, regulation can definitely help. But I'm not sure how much regulation could have done in this situation.
Do you think it will stoke more regulators to participate? What do you think they're talking about right now? It's an important question because it will affect projects and protocols and firms, and certainly, the VC space. What do you think is going to happen post FTX fallout? The reverberations is true. It's going to be very ugly. Do you think? What's the sentiment, in your view, that we're going to see from regulators in Asia?
I was actually encouraged that Hong Kong didn't react more strongly, and they actually said that they're continuing their path and their vision of how they think retail crypto regulation should proceed. I think they're playing the long game, and I think that's the right way to do it. It's obviously going to be very stringent. It's going to be probably slightly less lenient than it would have been, without FTX. But I think for the most part, they're probably 80% going to stay the course. So I'm encouraged.
Jin, you spent a lot of time in Singapore, Shanghai. Your perspective from that part of the world?
Yeah, I think it's it really it's across a pretty broad range of perspectives. I think if you look at country-specific regulations, I don't think we're going to have anything consistent to a standard for a while, but I do feel like there's a few regions along the spectrum. So if you look at the US, I think that will highly impact, for example, how UK and Germany look at it, while there are other parts of Europe that have been a little bit more forward-leaning at the moment. And then you certainly have Southeast Asia, and I think parts of the Middle East that are much more forward-leaning. And then China's its own different bucket, where their regulations are set up for the government to kind of control this industry. But that said, there's actually quite a bit of innovation happening, that continues to happen there. So at the end of the day, the regulators need to serve the stakeholders, not the other way around. And so I think everyone is still calling for innovation in this space, and these types of events call for a little more, again, clarity, transparency, et cetera. But you don't want to inhibit what can come out of this, which is huge. You don't want to throw the baby out with the bathwater. So I think everyone's conscious of that. The U.S. is a little bit. Unfortunately, there's a lot of politics involved, and I think they also are working off of a very, very old regulatory framework. They also need to just update their thinking. not only on the security side, but across the board. I mean, if you look at how late they were with just, data privacy on the internet, 20 years behind. So they can't, they really need to update the frameworks in which they're serving the stakeholders. And that's part of the problem. I think that's one of the reasons why things are moving very slowly.
I think there are a lot of threads to pull here, and it leads down to this. As we face what a new reality is, I asked this of Kevin, I'm going to ask this of you, but I asked Kevin where he was investing in 2023, and here's what he had to say. Where are you putting your bets right now? As you know, in this environment, you're putting your money to work. There's no doubt about it, because the investing power of any investment right now is extraordinary. What are you looking at? How are you doing your due diligence as you take a look into 2023 and what this industry looks like in the coming year?
I'm investing in platforms that can solve for speed and transparency and auditability. That's what Miston is, because what's been proven of late is even Ethereum is the platform, and Polygon that sits on top of it. These are important because they have a lot of applications on them. We still haven't solved for financial services transfers in the currency markets. That's the largest market in the world. It's too slow. So if I want to transfer, billions of dollars a second, I can't do that on ETH. And so we need to find a solution for that. And we need also to find a way to provide three things that the market's screaming for: secure wallets that are easy to use. We don't have that yet. We definitely need better security on those wallets, because most people don't trust decentralized wallets. And there's lots of reasons not to, because if they're not secure enough or you lose your capital, that's a problem. But number three, if you actually talk to institutions or pension plans about what they want out of the three, they want the regulation most. So regulation, security, and a new wallet technology, that's what I'm investing in.
Well, I think that's true. Everybody's going to want their own cold storage. They're going to want their own wallets, not your keys, not your crypto. We're going to hear a lot about that. But Jen, where are you placing your bets in 2023? How are you choosing your projects?
Yeah, so we are also looking at infrastructure layers, and for the same reasons that Kevin just mentioned on, but also at the application level, we're still very strong believers, I think, in the promise of DeFi. And we also have another vertical in IP content rights, content assets, but we're looking a little bit more at established IP as opposed to ground up IP. One area that we've deep dived in is in the carbon credit space. We've made 2 investments there, and we're continuing to look into that. That's going to be a longer time horizon to mature. And then also in payments and on-ramp between fiat and crypto, basically any bridges that lead into crypto, we're also investing in.
Jahan, where are you placing your bets?
Yeah, like I said, we're all over the map. We really like this kind of very broad-based thematic approach because we actually, in our mind, everything converges back onto the blockchain. Whether you're in DeFi, staking, NFTs, finance, wallets, it all actually is the same conversation. I say that notably, we are super interested in kind of 2 particular areas that I think we like. One is the data story, the data narrative of NFTs. So thinking about how data how NFTs will be used to encapsulate data and how that kind of reforms like atomic data storage and databases. And then the second, which I think is a bit more spicy and contrarian, is our commitment to non-cryptocurrency public chain. I think that for us at Kinetic, this is one of our biggest hedges to all of our entire cryptocurrency enabled portfolio. And notably, we're investors in the company that built the Spartan network, which is a non-cryptocurrency public chain, decentralized open source ecosystem. And I think increasingly, unfortunately, the FTX debacle has served to push forward the agenda of a non-cryptocurrency alternative to the crypto-enabled public chains. So for enterprise, for government, I think that this is a way forward.
It is a counter narrative to certainly the hubris that's centered around crypto and FTT tokens, at least. But to your point, the baby, lots of babies being thrown out, bathwater definitely. At the end of the day, we dare not conflate this moment with the integrity of the underlying technology that is not crypto. We're talking about blockchain. That infrastructure remains robust. And I will note that all relevant blockchains continued to serve that technology word on, despite what happened in the crypto markets. Jin Chao, No Limits Holding, Jahan Chu, Kinetic, thank you so much for joining us live. Thank you to Kevin O'Leary for joining us and giving us that perspective. All of you, it was a fantastic conversation, and we truly appreciate you sharing very candidly the insights as we all really seek clarity as the story continues to unfold from this FTX meltdown. That is a wrap for today, at least. We thank all of our speakers, as well as all of you in the audience, for joining us. And I hope you take away a lot of great insights here. There is much more to come on Forkast Plus. You want to stay tuned for our next event, Web3 Unicorns, how to identify strategic investors and accelerate into 2023. Again, these are interesting times, and we remain here for you to aggregate the best and smartest conversations. And you want to visit Forkast.News. Do stay with us to watch what Kevin had to say fully, our full interview together on the FTX saga. Until then, take care. I'm Editor-in-Chief of Forkast, Angie Lau. See you next time. 2 days, one tweet was all it took for one of the biggest stars of the crypto world to come undone. It's a story that's been seen time and time again in finance. A trusted cog in the financial world makes bets far beyond what's necessary, eventually leading to a collapse of the house of cards. But as this fall from grace of FTX, Alameda Research, and Sam Bankman-Fried unfolds, we're going to get you one of the biggest voices out there to make sense of what happens to crypto from here on. You know him as Mr. Wonderful, one of the most charismatic sharks of Shark Tank. Welcome, Kevin O'Leary. Man, we are all swimming with the sharks right now. It's infested waters out there. Your immediate reaction to the fall of FTX?
Well, it's a story unfolding. I mean, just to be clear at this point, the two question marks regarding the situation are the equity of those who invested in the equity of FTX International and US, and those are at a $32 billion valuation. So that's question one. And question two is the gates are up on the accounts. So FTX was such a large global platform that most players in the crypto market, including governments, had allegedly have accounts there, and they cannot withdraw their capital right now. There's no liquidity. So the question becomes, how long does it take to resolve it? And so obviously FTX itself has tremendous value in the sense that they have an exchange that's global. It's got global reach. And so what's probably, and I'm speculating when I say this, going on right now is that FTX, Sam Bankman-Fried, and others are exploring an option of liquidity, trying to figure out, you know, the word on the street is it requires about $8 billion to maintain liquidity. But here's the funny thing about liquidity. If in 5 minutes you saw a tweet that there was going to be a white knight, the withdrawals would stop. That's the remarkable situation. So any investor is going to try and figure out, okay, how much real liquidity is required to maintain the FTX platform? Because if I could buy FTX today and figure out, you know, how much risk there is with regulators and everything else, I would be looking at that asset. It's almost impossible today to build another Binance, build another FTX, almost impossible. And so that have a global reach like that. They were nascent, they were early, they were first. They were effectively like Microsoft in the sense that they became standards. Now, you can see that between Binance and what's going on with FTX, that if one of them were to just disappear, the other would greatly benefit. And I'm not sure that's good for crypto markets, because together they have about 80% share of the global markets. And so this story is not finished. It's not finished. Again, I'm speculating. I could, bet. I'm sure there's a tremendous amount of transactional discussion going on here. But again, I go back to it's a business of trust. And so the minute you feel that it's backed again with liquidity, all of a sudden, the pressure to withdraw is reduced significantly.
Which means that those pools of dollars or crypto remains at least safe for now. Kevin, you talk about trust. You shared a lot of your trust in FTX. You were a spokesperson for what was once the second largest crypto exchange in the world. Did you see these series of events coming? Could anyone have foreseen this? There are a lot of smart investors from around the world, Sequoia, Temasek, you name it. And in fact, the entire industry really believed in SBF and this exchange, that they had everything going right, the white knight narrative taking over, and bailing out firms during the crypto winter. That trust, did you see any of the signs?
Let me be transparent, 100% transparent with you. Number one, I'm an investor in FTX International equity. Number two, I'm an investor in FTX US equity. Number three, I have accounts with FTX. I have capital there inside of my account. Obviously, like everybody else, I'm gated currently, so I can't withdraw that. I'm actually, when I look at who are the smartest players in crypto, it's still Sam Bankman-Fried. He's one of the best in terms of understanding the blockchain and how it works. And so I'm going to hold back on my, decision about this until I get the facts. The one thing about the crypto world, the unregulated crypto world, it's full of innuendos and allegations, very often not true. I also understand the dynamics between competitors, FTX and Binance. And so I get that joke. I'm waiting for facts like everybody else. I am not the only investor. There are many large institutions, as you've just detailed. We're all waiting for facts. Now, these are all allegations at this point. It's not, overall though, this is not helpful for the crypto participants, the crypto industry, those of us that are players trying to get regulation through, with the exception of one attribute. The pressure on regulators to get regulation now in this space is going to be hyperbolic. It's going to be so much pressure. And you and I have talked about this before. We cannot go forward without regulation. Gary Gensler was just on the airwaves. He was getting his head squeezed by Andrew Ross Sorkin about this very issue. And Gensler has to. We want him to. We're begging him to regulate. And this is very important because it brings confidence and trust back into the markets. It is a global market. Crypto is not going away. It's not going away. It'll take this hit. It'll move on because the promise, the productivity, the attributes of it are so powerful and so disruptive that they deserve a place on the international financial services stage. It's just a matter of when are we going to get that regulation. So I will stay invested. I have many other positions. This is not the first time I've had to take down, as an investor, you have great days, you have bad days. That's just the way it works. But you learn over time to be diversified. I don't have all my eggs in one basket, obviously, but this is a significant investment. But I'm not writing it off yet. I'm waiting to see what happens. FTX has value. Many players know that. There must be a tremendous amount of activity going on in the background trying to figure this out.
There could be the last chapter has not yet been written. This is what I'm hearing from you, Kevin O'Leary, and that is absolutely true. These are early days yet. I want to pick up on what you said about Gary Gensler. Last comments from him in that interview on CNBC was essentially that no firm, inferring all crypto firms, should be trusted to follow the regulations that we see on the New York Stock Exchange. We can't assume that they are following the rules. And my thought was, there are no rules to follow. There are no clear regulations that have been established yet, despite the growing calls for regulation, including yourself. We're seeing 20 plus draft legislation. We just had the midterm elections in the U.S. People are still trying to count the ballots and see who the winners are. Where are we on regulations? You can say that you can't be trusted. You can't assume that we can trust anyone, which essentially is a giant brush, black mark against the entire industry. And yet, where are those regulations?
You're 100% right. 100%. And my point about this, with all of the regulators and all of the bills and all the fact that midterms are over, we can get back to work on the Hill. It's time to apply legislation and enforce it. And so let me give you an example. Gensler was talking about the instability of stablecoins in his recent interview. There is a bill put forward that regulates stablecoin, the Stablecoin Transparency Act. Let's move on it. It's time to do it. Let's get that done so that they are completely audited, they are regulated, they are secure, they are transparent. That would be a good step forward. Then we can go and look at any of the Digital Commodities Act bills that are out there that start to look at Bitcoin and other tokens. Bring it on. If all of this volatility has any silver lining, it's going to be the tremendous pressure on the Hill to push forward legislations and protect investors, which is what they've always done. The system works when it's regulated. And for any of you out there, the early Kryptonians, as I call you, that don't think we need regulations, I'm turning your channel off. I've had enough. I've had enough about let's keep it decentralized, no regulator. I'm just tired of it. I'm tired of that rhetoric because it's not helpful at all. It's not helping anything move forward. All it's doing is diminishing value. It's crushing the valuations. Look at what happened to Bitcoin the minute this volatility brought into the market. Lost another 20%. We're never going to get Bitcoin back on a positive track until it's regulated. Same with stablecoins, same with everything. And so now's the time to use this opportunity. You know, when you get volatility, we have the proverbial blood in the streets right now. This is an opportunity to push forward legislation.
Is there an opportunity right now for investors? A lot of people taking a look, they were feeling pretty good about prices of Bitcoin, seeing a period of instability. And then all of a sudden, it really seems that the industry leaders shot the industry. It feels like a headshot, but it was certainly not the foot, as a serious body blow. There is now a feeling that the industry itself, the entire industry, crypto, faith, trust in blockchain itself, under duress, and people are leaving. And they're taking their dollars and their trust with them. What's your take on that?
Yeah, I mean, that is what you could say in an hour like this. But the truth is the opportunity of what blockchain provides in authentication or what it provides in transfer of funds or payment systems is so disruptive that it'll be back on track as soon as we get legislation. I'm not worried about that. And in fact, you're bringing up an interesting theme here that we should transition into or segue to, if you will. I have never seen more opportunities than I have seen in the last 2 days to invest. My team and our fund are being inundated with new projects that obviously have hit a brick wall in terms of getting funding. I'm tiptoeing through the tulips at extraordinary valuations. I don't care what they were thinking they were going to raise at last week. It's a whole new ball game today. And so I think some of the greatest investments I'm going to make in this space are going to happen in the next 60 days. nothing brings forward opportunity than chaos. And we have max chaos right now. This is the time to hold your nose, even though you feel queasy about crypto for obvious reasons, and invest, because you're going to get it at valuations that have never been seen before. The air has been, popped out of every single crypto deal tire. And now it's just a matter of picking the best projects, which is exactly what we're doing right now. I'm doing that with the Cypher Fund. I mean, I'm very opportunistic, and I'm very happy that we brought this fund at this time. It's very difficult to raise capital, but the counter argument is, look, the opportunities are extraordinary, absolutely extraordinary now.
You bring up a great point. Cypher Fund, UAE, you have Middle East money in there. This is a new fund for you. You're getting into some serious action right now. And we're hearing as well from other smart VCs like yourself that are holding their nose. Some are probably doing something else. But the ones who are holding their nose are seeing a buying opportunity and doubling down, because whatever you're doubling down on, the purchasing power of your dollar right now is probably 10x. Would you say?
It is. It could be even more. I'm going to have a conversation this afternoon with a deal. What's happened is all the deals that were close to closing in the last 60 days slowly ground to a halt, like molasses, because the market can sense this coming. And obviously, Bitcoin's an index of pricing all crypto. And once it started to take a run down, past 10, 12, 15, 20%, all the deals just collapsed. So now the ones that we liked, that we had done due diligence on, and we've only closed one position in Cypher, missed it, which, I love. Evan Chung is fantastic, and that's our first deal. So I look at the quality of the opportunities. If there's more Evans out there, and there are, whatever we were going to pay, we're going to pay 10 times less, maybe 20. Let's see what happens.
This moment for crypto, as you watch the drama unfold between two giant firms, once friends, Binance, the first investor in FTX, now it's last, as Sam Bankman-Fried said. But watching these two play it out to the public, on the public stage, on Twitter, was this smart?
No, it wasn't. It hurt both of them. But, we're talking about global entrepreneurs here that I'm sure both have big egos. One strategy, and again, I'm 100% speculating, because I think both of these are at the top of their game. CZ and Sam Bankman-Fried are the two founders, if you will, of these giant global exchanges, because they are. Now, if I thought, in the thought of Zen and the art of war, that I could wipe out my competitor and get all of their accounts with zero customer acquisition cost, that would be very tempting. And for many observers who are seeing this open, public, social media battle, that's what it looks like. Now, that's not going to happen because, again, I'm just speculating. I'm just looking at it like anybody else looking at it, watching these dialogues go on. But if I really thought I could acquire billions of dollars of accounts for free, of course I'd be interested in exploring that. But the rest of the market sees the value in those accounts too. The question is, what price are they willing to pay for them? And again, the calculation comes back to what we talked earlier about. This is where it gets very interesting. Right now, there's a gate up on all the accounts. You can't take your capital out of FTX because you feel there's no liquidity. There is no liquidity. The minute you thought that somebody was coming as a white knight to provide that liquidity, and let's say, for argument's sake, it was $8 billion, and all of a sudden the value of FTX equity, the equity value, goes from potentially zero right back up to a new number. So that's the calculus that's going on in the open international market. And if someone was telling me, well, no, there's nobody interested in FTX, that's just simply not true, because you can't make that platform up again. It's impossible. So this is why we've got to stay open, see what happens, keep an ear to the tracks, Remember that crypto rhetoric is 95% BS. That's the way it's always been. All of these blogs, all this noise, it's all BS. We don't know the facts yet.
But you bring up a very interesting fact, which is that there is value here. This is not run down to zero because this is not a business that nobody wants to participate. This is a business that people can't get money out of, and there is a trust issue. If trust is restored under new management, and as you said, $4 to $8 billion potentially could restore that trust and give people back their dollars if that's what they want to do. Are you hearing? Are you potentially having these conversations? You're sitting on a giant fund. $8 billion is, in some parts of the world, very affordable. And that's a part of the world that also you're familiar with in the Middle East. Is there some sort of conversation or conversations that are going on right now to assess FTX value?
Angie, you're very good, but you're not getting this out of me. No chance.
Well, I think you revealed a lot and you shared a lot of perspective on FTX. If there is value, Kevin, how quickly can this be done? Because the time is of the essence, right? The longer any person waits on the sideline to decide to either rescue Justin Sun over at Tron is allegedly trying to put a deal together. Also a smart guy in the room trying to figure things out. What's the timeline here before this opportunity expires?
There is no expiration date on it. In the meantime, the assets are locked up. Obviously, regulators are getting involved. It's not clear what the law is because this is not a U.S. company that's under pressure. It's offshore, so there's issues there. There's the trust issue, obviously. But I would speculate that much of what's going on in the background will happen before December 15th. In financial services world and private equity and venture capital and all of the above, that world tends to shut down around the 15th of December traditionally. Now, however, this is global, so maybe we get an extension on that. Who knows in terms of how the world watches it. But this is the premier crypto story. It's not going to go away. You're going to be covering it. Every network worldwide is covering it. It's getting heavily scrutinized every hour of the day. And I think the benefit will be, I'm going to Washington pretty soon. I know this will be top of thought for all of the senators and governors and lawmakers that were working on commodity or transparency bills. That is the upside. I would imagine, and Gensler himself, there's no topic, his calendar is public. Let's watch who he's meeting with. Let's just watch.
That's great. That is a great signal. That's 100% true. Two last questions. One, to pick up on your point on regulations. Regulations from the U.S. perspective, very clear, gold standard, some would say. And this was not what FTX.com, the international, FTX International, they're in Bahamas. And one could conjecture that the jurisdiction shopping of regulators, is that over now? Because we're starting to see different pockets of the world, Singapore, Hong Kong, London, Bahamas, Seychelles, across the board, raising their hand and saying, including Australia as well, raising their hand and saying, we're going to regulate you. Come hang out here. We will expand your business. Do you think that those days are over? Do you think we're waiting on the U.S.? What's your assessment?
Yeah, they are over. You're not going to get scale. You're not going to get institutions. You won't get pension money in an offshore jurisdiction. Not anymore. What we need now is Gensler or other regulators. You have to decide who actually owns payment systems in the case of stablecoins. I'm not sure it's the SEC. It could be the Fed itself. We don't know. But whatever it is, it has to be determined. And the reason that's going to stay this way, Angie, is that If you're a large pension plan, I don't care what country, it could be Denmark, it could be UAE, it could be Saudi Arabia itself, you are not going to mess with the SEC because it's the only market in the world where you can take your excess capital and deploy it in 5 or 6 minutes. If you have $1 billion, you can put it in the S&P 500 in 1 second and not move the market. It is the only market on earth you can do that in. That's why the US dollar is so strong. All the world's capital in times of volatility and war want one thing, the US dollar and the US equity markets and the debt markets in the United States. And so the time has come for crypto to grow up, to become mature. It's not 18 years old anymore, it's 19. You can get a driver's license in every state.
It can almost drink.
Almost drink, but right now it'd be good if crypto didn't drink anything for a while and stayed sober and just got to the place where we're regulated. And I think that is going to be the theme for 2023. It is not going away. It's simply not going away. It will never go away. The genie's out of the bottle, so let's regulate.